Mort Zuckerman is here with us now. You know, so many people look at the housing market, particularly this month, and say we're at an inflection point. You look at the mortgage-backed securities, you're going to stop seeing the Fed purchase those. You look at the expiration of the TALF program as well, and there's a growing rumble of concern about what happens with mortgage rates and the impact on the housing market. Tell me what your view is. How worried are you?
Well, I think it may be an inflection point. We may have another major dip in housing prices. They've already gone down on average about 30%. But you have approximately 5.1 million homes where the mortgages will exceed the value of the homes by a third, or in other words, the value of the homes will be about 75%. That's when people begin to walk away from their homes. You have, in effect, a shadow inventory of homes that are about to be dumped on the market if we don't find a cure for that problem, that will drive down the prices of homes, because once a house gets foreclosed, it usually drops another 10 or 15% just immediately, and it affects the value of all the houses on the street. So therefore, you have to find some way to deal with the foreclosure problem. Everybody has recognized this for the last several years. The government programs that we had to date have really basically not worked, and we're just going to have to come up with some new programs to prevent this number of foreclosures.
Well, you speak to individuals who work at the BlackRocks of the world and elsewhere who are concerned not just about the first round of mortgages, but the second liens out there, and really sort of the lack of consensus, lack of solution to solving that other leg of the mortgage issue.
Right, for sure. That makes it even more complicated and difficult to find a way to restructure the financing of a home, because nobody, if there isn't enough equity to cover the first mortgage, there sure ain't enough equity to cover a home equity loan or a second mortgage, and a lot of homes have second mortgages, and therefore it becomes very difficult to resolve those issues. And it's also true of securitized mortgages. It's very difficult to resolve those issues in some way to keep the people in occupancy of these homes. And so you really have a burgeoning crisis here that could really create another explosion and another major drop in home prices.
But do you think that's understood in Washington, the need? I mean, I know the Treasury's put forth some sort of proposal to deal with the second liens in particular, but you don't hear as much hand-wringing and people out there saying this is a crisis looming. You certainly are today, but why aren't we hearing more about it in terms of lobbying?
Well, I cannot give you an answer about the whole procedure of lobbying or what the government concentrates on. I think one of the problems is the government has been concentrating on health care reform rather than all these various elements that go into creating an economic crisis, because if housing is and has been the largest single asset on the balance sheet of the average American family, and we have another drop in housing, it's going to affect the entire economy.
But you want to see what we saw during the Depression.
That's correct.
The Homeowners Loan Corporation that would go in and take control of these mortgages.
That's right. In effect, the banks are reluctant to foreclose on these mortgages, but then they have to take a big write-down. And the banks don't want to do that, and that's understandable because their equity, shall we say, is strained at the moment. So what we did in the Depression was the government gave them some amount of government-backed paper, took over the mortgages, ended up owning 20% of all the mortgages in America in those days, but it saved millions and millions of homes from being foreclosed. We have to find something like that that at least will give us the capacity to step in if we have to, because a major downturn in housing will be an economic disaster. So
do you or do you not think that the government, though, should force the banks to look at those second liens? You're talking about going out and buying those mortgages outright.
From the banks. This, believe me, will be an incentive for the banks, because instead of having illiquid mortgage paper, they will now have liquid government paper. And this is something, A, it recapitalizes and reliquefies the banks, and B, it gives us an opportunity to find a way to keep people in their homes instead of having foreclosed homes dumped on the market, which is what's going to create chaos if that happens anywhere near to the extent to which you're going to have homes where the home is basically worth 75% of the mortgage.
And who would be doing the purchasing there? I mean, whose balance sheet would be the government be adding to?
The government. The government is going to. It's going to have to be a government agency.
You're not looking at the Fed anymore, which is stopping its purchasing. I mean, you're looking at.
Look what we have done. Fannie Mae and Freddie Mac are deliberately held outside the government, so that all the money we're putting in there in one form or another, or the borrowing we're doing there, which we've done by guaranteeing an unlimited amount of borrowing from Fannie and Freddie, it doesn't go onto the government's books. However we structure it, it has to be done operationally, because otherwise the real economics are going to become pouring in on and pounding in and everything. It's a huge issue, and not enough attention has been paid.
Hold that thought, because we're paying attention to it.